Well, here we are again. We're bouncing up against 440. That is what I would continue to expect the rest of this week and into next week. Now, again, we could pop through 440. I'm talking about Tesla in case some of you are new. We could go through 440 for a minute or even for a day. I just don't think it'll hold until we get the actual numbers next Thursday. But there could be, some people that will be, trying to jump the gun, trying to make the trade ahead of time. That'll be interesting to see what happens. But yesterday's sell-off was just, as I said yesterday, I think just profit taking. There was no particular reason for it. And today we're back to where I think true taking everything, all the technicals and all of the fundamentals together, the prospects, the various analysts and their predictions, I think you take it all together. I think we're exactly where we should be. Now, sometimes when you're exactly where you should be, then people will say, well, that's a good time to sell. I'm not saying that at all, by the way, because I do believe we will be at all-time highs by the end of next month, and that's quite a nice profit for those who decide to get in at this time. Now, having said that, I'm not suggesting you buy right now either, because guess what? This is not investment advice. This is Randy doing an analysis. And I've been right for a few days in a row. Do not take that as any evidence that I've gotten any smarter or wiser. It's mostly just, of course, a lucky streak. So next week I could be just completely wrong. Okay, let's go ahead and take a look at what is going on this morning. Investing.com says this: Tesla is set to post robust third quarter results, according to Wolfe Research, which said deliveries are likely to beat expectations. Quarter three is poised to be a strong quarter, Wolfe wrote, pointing to stronger than expected demand in both the US and China. Well, not stronger than expected. Well, and he doesn't listen to the channel, does he? No, we've known all this month that we were going to have, I mean, for a quarter, since the beginning of the quarter, we've known that this was going to be a strong quarter. I've been predicting that it's going to be, the fourth quarter is going to be strong too, but nobody's listening to me. The firm estimates deliveries of 465,000 to 470,000 vehicles. I think that's a fair good estimate, up 22% on quarter one and 1% year on year, well ahead of consensus, which right now is at 445 according to them, 431 according to others. Part of the upside stems from U.S. buyers rushing to take advantage of the expiring $7,500 electric vehicle tax credit. And of course, China contributing because of the Model Y long. And they don't say that. They just say China contributing. We estimate 165 to 170,000 deliveries in Q3 are 10% above our prior estimate. Oh, that's in Canada. I'm sorry, China, adding that the volumes largely do not reflect the recent launch of the Model YL. They don't take that into consideration. With stronger volumes, global pricing trends and contributions from Tesla's energy business, we'll see third quarter earnings per share. Well, okay, now listen to this. Listen to this now. This is the first one. Wolf has increased their earnings per share to the range of 55 to 60 cents compared with the consensus right now at 49. Okay, well, now that's not a huge jump, but it's a jump. I'm, of course, saying right now my earnings per share is around 70 to 90 cents, depending largely on what happens with energy deployments. The firm also expects auto gross margins, excluding credits, of about 16.5 to 17%. That's probably just a tad light. The firm expects auto gross margins. Why did they do that twice? Looking ahead, Wolf cautioned that quarter four will be more challenging with a step down in revenue and earnings as U.S. demand is pulled forward by tax incentives. What he's not taking into consideration is that energy will almost certainly be up pretty dramatically in the fourth quarter because of the Shanghai ramp. It is factoring in a 30,000, it has factored in a 30,000 unit quarter on quarter headwind. So they're thinking that if it comes in at 470, maybe they'll only come in at 440 the next quarter. That's not unreasonable. Not unreasonable. I think we'll need to get further into the quarter to get an idea what U.S. sales are going to look like. I'm expecting China sales to be huge, a very big beat on China. Europe, is looking like it's beating. He doesn't even mention that. It looks like they said they've increased the amount of hours that they're producing over there. So no, I look at the fourth quarter probably going to be equal to the third quarter, and surprising everybody. Still, Wolf pointed to several offsets: seasonally stronger demand in quarter four, especially in China and Europe. New model launches. Why does he say especially in China and Europe? The United States has very strong fourth quarter demand. New model launches, including the Model YL and the possible affordable vehicle lineup. Rising energy storage deployments and progress in autonomy. I mean, those are that's a very good analysis. I mean, yeah, he was wrong in a few places. He should have called me. I could have helped him out with a little bit of it. Innovating coin on X says today Tesla's ground validation testing was spotted in Plano, Texas. Robotaxi may be coming here soon. Not maybe, they will be if they're doing ground testing. From Drive Tesla Canada, the Boring Company, best known for now listen to this. This is an amazing story. The Boring Company, best known for its underground transportation tunnels, is looking to expand its Vegas loop in an unexpected direction above ground. The company's applied for state approval to operate Tesla vehicles on surface streets as part of the airport transfers to and from Harry Reid International Airport. The application was submitted through Paradise Transportation Company, a Boring Company subsidiary. The request outlined in a draft order seeks a certificate of public convenience and necessity. If approved, it would allow portions of the trips to the airport to run above ground while still requiring riders to travel through part of the existing underground tunnel network. In other words, why couldn't they say this more straightforward? Okay, we've got this underground network that's going from the various hotels and over to the convention center. And if you are using some of that underground transportation, you're getting picked up at one of the hotels, you're getting picked up at the convention center, and you want to go from there to the airport. You don't have to get out at some point, get into a cab and take it to the airport. You can get into that cab. It can go up and out and overground and go to the airport. According to the proposal, rides would be priced in tiers: $7 for trips up to 3 miles, 12 for 4 to 6 miles, etc. Local leaders see the airport connection as a crucial step in making the Las Vegas Loop a viable citywide transportation system. Steve Hill, president and CEO of the Las Vegas Convention and Visitors Authority, stressed the importance of expansion. It's important for our visitors. It makes it important for our community. The ability to go that last half mile or mile to the airport and connect people to the tunnel system is something we think is important, and we know that our visitors would appreciate. The NTA is going to hear anyway. So that's all very interesting. By the way, the Las Vegas Loop has already transported more than 3 million passengers across the 8 current stations. This is Randy Kirk. Please do all the things you're supposed to do. Have you been forgetting to do them? Because I don't say it anymore. So hit the like button. Then if you haven't subscribed yet, maybe you're new, because and then you hit the subscribe button, because you're going to get amazing stuff here. And once in a while, I'm going to be right. And then you can hit notify, because later on today, of course, it is Wednesday, so it's Brian Wang. And then after Brian Wang, it will be different tonight. It'll be Brian White. So we've got the regular old Wang and White setup. Barron says this: Jay Powell's speech Tuesday contains several warnings, not just one, including that market's view on aggressive rate cuts is far from guaranteed. He spoke of the challenging situation with upside risks to inflation, downside risks to the labor market. Two-sided risk means that there is no risk-free path. That dilemma is only compounded by how divided the central bank appears to be on the issue. So just yesterday, Fed Governor Michelle Bowman suggested more cuts may be needed to support the jobs market, while Atlanta Fed President Raphael Bostic said inflation had been too high for a long time and he was more cautious. Friday's PCE data this Friday, the Fed's preferred inflation metric, will add to the argument, but it probably won't decide it. Recent data shows economic growth moderating, unemployment edging up, weak housing data, and slowing consumer spending. I don't agree with any of that. The recent data shows economic growth moderating. No, the Atlanta Fed shows 3.3. No, I'm not buying that. Unemployment edging up. Unemployment it did edge up, but I don't believe the numbers. Weak housing data. Yes, weak housing data is true. Slowing consumer spending. No, it's not showing that. This is all what Powell said yesterday in the meeting. Joe Bruce, chief economist at RSM US, calls the situation stagflation light. It's just not true, as you'll see in a minute when I give you the truflation numbers, where the economy wavers while prices remain high. Well, if the economy's wavering, you wouldn't call it stag anything. You would call it a nice, okay economy. Wall Street Journal says this. Stephen Moran, the new guy at the Fed that President Trump just put over there, set out the case in a speech on Monday, focusing on changes made by the Trump administration. Lower immigration, less government borrowing, and lower regulation, and he doesn't even mention the big beautiful bill, all justify lower long run rates. And he argues that Trump is delivering all three. He plugs his estimates into the widely used Taylor monetary policy rule to work out where current rates should be, a lot lower. If he's right, the markets need massive moves. If bonds, the currency, and stocks would all adjust and fall in line with the economy that, on Moran's view, is struggling against a far too hawkish Fed. Bonds are the most obvious. Moran argues Trump's policy changes mean the equilibrium, real long-run rates, a theoretical rate known as R star, are down more than a percentage point. The price of the 10-year Treasury inflation-protected security should be about 10% higher if yields drop to meet Moran's estimate. Long bond yields and easier Fed should make a sharply weaker dollar, assuming they are mirrored by other countries, which sometimes does happen. The immigration clampdown has hurt some employers, but it could also lead to labor shortages and higher wages and feed through to higher inflation. Yeah, but there's no real evidence that's happening. We're getting good labor price increases, and they're well within the Fed's expectations for the labor increases. It could change, and that could lead to inflation. This is 100% true. When I say that, it can only happen if there's too much money or if the productivity doesn't follow. So if wages go up, but productivity goes up, then that'll be fine. That's everybody, just keep that in mind. Productivity is the key. If wages go up 10% and productivity goes up 12%, you're not going to get any inflation. Does that make sense? Let me know in the comments below. Higher taxes help control the deficit, but over time, tariffs, the main tax rise, should generate less and less revenue as customers and businesses shift purchasing and production to avoid them. That's likely, but I don't think it's going to be major. The effects of supply side changes such as deregulation are notoriously unpredictable. Not when you're tearing up regulations by the thousands. That's not unpredictable. Moran ignores the increased government intervention in the economy under Trump, such as the partial nationalization of chipmaker Intel. I'm sorry, they don't even have the golden vote. I mean, it's just they bought 10% of the shares. Markets are booming. Stocks, corporate bonds, and gold have all been doing extremely well. Businesses and households are borrowing steadily from the banks rather than being put off by the high rates. True, the job market has weakened, but since inflation has been rising again, it's far from obvious that rates need to go lower. Inflation has not been rising again, as I've mentioned 1,000 times. Vigilant Fox says Scott Bessent just ended both Kamala Harris's and Pete Buttigieg's careers in one fell swoop. Bessent, who is gay, in case you didn't know it, was asked to respond to Kamala's recent claim that she didn't choose Buttigieg as a running mate because he was gay. He laid out 3 reasons why that excuse is total nonsense. First, it shows her emphasis on identity politics, and the American people have moved on from identity politics. 2, it shows how low regard she holds American people. She was a terrible candidate. And 3, you wouldn't pick Pete Buttigieg because he might have been the worst transportation secretary in history. She judges him on his identity, his sexuality. Let's look and see whether he did a good job. Let's look on merit. And I can tell you on merit, he's a failure. And on merit, she's a failure. Besson is a he is low-key a savage. You know, the thing is that Pete Buttigieg has a very nice speaking voice, and he's very articulate. And the left really appreciates that. They love people that have a lovely speaking voice and that can articulate well and sound intelligent, but they never look below what they're saying to find out if they have anything smart to say. And in Buttigieg's case, he's a low level, he's a clerk. I mean, the guy is really nothing. He's never done anything that anybody could stand up and say, wow, look at that, what Pete Buttigieg did. And besides, you know what really disqualifies him, unfortunately, it's just true. It's identity politics. He's short. We haven't, okay, now we got to change the mood. Okay, that was the good mood. Now we got the bad mood. We have an unfolding tragedy happening in Texas. Some lunatic has killed an ICE officer this morning and also killed himself. There might have also been some injuries. Now we'll have to endure another week of the left celebrating the death of this ICE agent. I don't know what we're going to do about this. I am not clear how America is going to figure out how to respond to an asymmetric terror war by individual leftist lunatics that may or may not be individual. Maybe there's some grand conspiracy behind it. Maybe there's some kind of craziness going on that we haven't been able to find yet. But the Trump administration definitely needs to step it up like times 10 to find out where is the money going? How is this being done? We need somehow to tamp down the leftists with regard to their rhetoric because it's just breathtaking. Okay, breaking news. We've got sales of new family houses in August. Now I'm gonna do this slowly. All right, so first of all, sales of new single-family houses in August were at a seasonally adjusted rate of 800,000. This is 20% above July, which is only 664,000. So being 20% above that low number, 664,000, would not be that shocking, but it's 20% plus or minus 21.8%. Why would you even put out a statistic that is plus or minus 21%? And is above the July rate of last year is up 15%. Above the August rate rather of last year. That's plus or minus 25%, 15% up, plus or minus 25%. And it goes on. The seasonally adjusted estimate of new houses for sale at the end of August was 490,000. That's 1.4% higher, below, rather, the July number, but it's plus or minus 1.3%. That's a much smaller number, thank goodness, but it's still almost the entire amount. And then and below the July 2020, I'm sorry, and is 4% above the August 2024 estimate of 471, but that's plus or minus 5.2%. This represents a supply of 7.4 months at the current sales rate. I believe there is an oversupply right now. That's absolutely true. I don't believe the prices are going up because looky here, the median sales price. Now, median sales price is the most ridiculous number that we've ever watched because in any given month that median could go up or down based on what the home builders have decided the market is. It has not. I mean, it's just okay. The median sales price of new houses sold was 413,000. This is 4.7% above July. And 1.9% above August last year, the average sales price of new houses. Now, the 1.9% above last August might be something close to true. Although I will tell you that the prices, I just checked all three of my homes, they're all down about 5% from their high, according to Zillow, which I would believe before I believe any of this. All right, we've got inflation, according to another thing I believe, Trueflation saying overnight is 2.05. That's coming down again. We've got the year over year at 1.87, which has been around there for quite a while now. And we've got the PCE coming down a little bit more at 2.46. So those would all tell me that we're in pretty good shape, especially when at least 0.4% of that is tariffs. We got 48% for the president. His numbers have been going up and down a lot recently, but still in that same range. 47 to 53 has been the range for quite a while now. And we've got the Atlanta Fed, as I mentioned earlier, still at 3.3. Okay, what is this all doing in terms of the markets? Well, we now have, but I said this morning that Tesla is bumping up against 440. Well, it's 439.07. We are up 3.1% this morning, so we're kind of right back to where we were 2 days ago, although we closed, I think, at 434. I think this is where we closed. We got the Dow up 0.08. We've got the NASDAQ down 0.04, the S&P down 0.03. Well, once again, I'm sorry, but I was 100% right. I said this week would be flat again because everybody's waiting for the PC on Friday. We had a little bit of up and down in the meantime, but there's just not a lot of action. If you look at the Magnificent Seven, almost all of it is very, very flat. I'm sorry, that's not correct. I'm sorry. It was flat, reasonably flat. Yeah, I would say flat. Yeah. NVIDIA is down. Most Apple and Google are down. The rest are up, but all by small amounts. The VIX is sitting at 1660. It has popped up just a little bit, but I'm not sure why, but it's also tailing down right now. And then you've got the Cathie Woods are all up after being all up yesterday. So up 2 days in a row. And yesterday the bonds they did finish down, but last time I looked, and we will now go check, the bonds were going up a little bit. So we're back up to 4.133. Remember, my rule is we cannot go above 4.15, and I still believe we will not, but we are 1.5 basis points up compared to yesterday. We've got oil up another 97 cents to 64.36. That's still totally in the range of about 62 to 65. Very narrow range recently, extremely narrow range. Natural gas also in a fairly narrow range. For natural gas, it's up 0.53% this morning. It's at 287. It has been between about 270 and 315, something like that, but very, very narrow range again. Now, yeah, gold is down 28.40. That has been going up, 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 up. So this is interesting. It's finally got some profit taking. I don't know. I can't guess where the high is going to be on gold. It's unclear to me how it could go up 40% in 1 year and not have a massive amount of profit taking, except that China, at least, and others are buying a lot of gold. Silver is down 0.78% compared to gold down 0.76. Copper is up 3.29. What is going on there? I'll have to check into that. I'll try to remember to do that before I talk to you tonight. Copper at $4.74. Remember, I've been saying I believe it'll be going higher. I've really been right a lot this week. Don't tell my wife. That's a joke. She actually thinks I'm smart. She and my mom. That's two. Copper, 474. Okay, again, I shouldn't be surprised because I've been saying I think it's going to happen, but why is it going up over 3% today? Don't know. All right, we've got the dollar mixed, and we've got Bitcoin up nicely, 1533 to 113,239. That's still way off its all-time high. And I'm sorry, I forgot Ethereum, 4,175. That's up 0.35%, not as much as Bitcoin. All right. A reminder again, we got Wang and then we got White. Okay. Wang will be on around 5-ish, 4-ish, 5-ish, somewhere in that range, and then around 7-ish for White. So watch the Bryans tonight. I'm positive you will be entertained and informed. There you go. That's the show. That's my new show name. Entertainment and information. Anyway, last night, you definitely want to go back and hear what Brian Wang had to say. The Bradford Ferguson, you watched him like crazy. But I think of the two shows last night, the Brian Wang information was more, was there, there was just more kind of deep stuff there that we don't normally talk about. So I'm going to put that card up. Go back and check that out. I mean, hey, listen, Bradford is always really good. And if you didn't watch that, you should. He talks about his new venture with Larry Goldberg. You might want to hear about that. All right, that's all I got for you right now. I'm going to say, should we look and see? Okay, let me, just before I say it, before I say the words, let's go back and look. You, yeah, we have got Tesla. I'm sorry. Here we go. Here we go. 438.60. See, bounced off again. It cannot end above 440. This is Randy Kirk. It's been great talking to you.